Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today is Friday, October the 3rd, 2025. We're going to talk a little bit at first about the government shutdown in the US. It is affecting ag markets, or at least some of the reporting that is happening in ag markets. So, a couple of things to keep in mind. Today, we didn't get to look at the commitment of traders report. So, we don't really know where the managed money sits as far as their positioning this week, which would have dated back to Tuesday anyway. But we still don't know that. That actually may give speculators a little bit more courage to kind of push the the trades that they make a little bit farther than normal. So we might see some increased volatility, particularly from the funds as a result of this. We also did not see, um, the export inspections reports and the export reports this week. And the big one is we won't see the WASD next week either, which is always a big, the WASD and the crop production report, which come out simultaneously. We won't see those this next coming week. So that's kind of a disappointment. We This is a big one, often for corn and for soybeans. So we'll have to wait another 30 days to see if this can wrap up and we can get more reporting back on the books. All right, let's talk about what happened in markets today. We saw canola down quite a bit today, $8.80 a ton, back down to 605, essentially reversing or eliminating the gains that we saw yesterday. Minneapolis wheat was down 3/4 of a cent at 597 and a half. Kansas wheat was down 2 cents at 497. Chicago wheat up half a cent, sorry, at 515.25. Soybeans were down 5 3/4 at 1018. Corn was down 2 3/4 at 419. Bean oil was down 40 points at 50.05 cents per pound. Canadian dollar up a little bit after quite a bit of losses over the last little while. 71 cents or 71.67 cents US, what the Canadian dollar is trading at. Cattle were both up today a little bit. Doesn't really make a difference on the charts. We're still off the highs in the cattle market. 234 and a half for live cattle. Feeder cattle are at 355.42. When we look at the week, the closing out of the week, we actually see canola down it's almost even to what the losses were today, down at six or down $9 overall in the week. So most of that came in from just the trade today. Minneapolis wheat was down 7 cents. Kansas wheat was down 8.5. Chicago wheat was down 4. Soybeans were up 4 1/4. So there was a couple of good days there where after the Trump post about China and the farmer bailout and things like that, that soybeans saw some gains. The rest were pretty much in the red as well this week. So wasn't a great week overall for ag commodities, but there were some green shoots, particularly with the soybeans and the optimism around the trade around soybeans. So let's see if that can hold over the next 4 weeks or so. Speaking of the weekly, we include that weekly graphic in our reports that we send out to our clients. We urge you to be a premium subscriber and join our ranks here. It's only $99 a month. You get all of our morning reports, our weekly report at the end of the week, anything ad hoc that comes out during the week as well. And you get these videos emailed directly to your inbox as well. So this week, we actually talked a lot about the statistics that have been coming out with the Canadian Grain Commission and just kind of the stories that those are starting to tell now, both bullish and bearish for Canadian grains. So you might want to check that out. If you do subscribe over the weekend here, we will send you that report for free. So give us a call or subscribe today and we'll get you going. All right, let's look at some of the charts here. Here's November canola. As you can see, there was some losses put in today. Overall, pushing back in down towards that $600 level. And you can see here that we're still trading tightly inside of this channel. And canola also continues to have a hard time getting above that 20-day moving average. So that's still some resistance there for canola. We also saw some losses in rapeseed. So this canola weakness is not only related to the Canadian side of canola, but also to the European side. That pushed back down to support down near 455 or 456, closed out the week at 458. These are euros per ton. So It's not just Canada, it's not just canola that's seeing the weakness. It is a little bit more broad than that. I don't know if you take comfort in that or not, but that is the situation. Soybeans again showing the gains over the last couple of days after the Trump post here. Today it took some of that down. You can see here that the 20-day moving average is still in play here, and the cluster of moving averages, which kind of suggests that this market is still more towards neutrality than any other kind of directional bias. But that again, that 20-day moving average is always a bit of a both a resistance and support level depending on the market you're looking at. Here's another example. Here is the spring wheat market. It started off the week up above or at that 20-day moving average and faded back down. Wheat had a bit of a tough week today. This spring wheat looks a little bit anemic from a future standpoint. So does the HRW, which did punch to a new low on Wednesday, but then kind of clawed some of that back. Still under the $5 handle here in the Kansas wheat market, though. Chicago actually has seen a couple of days of gains. It did something similar though on Wednesday, where it hammered down to new lows near $5, and it has since climbed back. Closing the week out at 5.15. So again, these sideways to downward, I guess, would be the right way to describe the wheat market. Wheat markets often take a long time to establish a bottom. We call them saucer bottoms, where it looks quite boring until all of a sudden you wake up one morning and it looks, like something's different. So that's kind of what we're seeing right now. One green shoot here in the wheat market, and this is specific for Canada. We are seeing some increases in the basis value. In the weekly report that we mentioned just before there, we dive into why some of that might be. So another reason why you might want to subscribe to our weekly reports, that's in there. But regardless to say, basis is changing. One of the reasons that it is the fading Canadian dollar. The US dollar has been gaining some strength recently because of, a move to a safe haven currency, as there are, some questions around the global economy and even the conflicts around the world, including Ukraine and Russia. So there was a bit of a safe haven trade through the week into the US dollar, or particularly into the early part. But we are also seeing rate cut expectations increasing in Canada here. The markets are now pricing in 60% chance that the Bank of Canada will cut rates again. That's on October 29th, so in a couple of weeks from now, or a few weeks from now. That is moving higher, though. It was about a 50-50 split just days ago. My opinion here is that we will actually continue to move higher. I think that in my mind, a rate cut in Canada should be a foregone conclusion. And I think that that possibility will rise into the high 80s or 90s percentile range as we move closer to that October 29th rate adjustment. And that generally will push the Canadian dollar lower. And from a grain pricing standpoint, that would be a positive. All right, if you haven't subscribed to this YouTube channel already, we encourage you to do so. That doesn't cost you anything. Hit subscribe, and we will see you again next week.